optimistic on the Nifties in the green.
Going back to, markets not doing well yet again.
For the markets, what a recovery that we've seen from the lows of the day.
Markets not being able to sustain. 30, 40 point bounces, 50 point bounces have been sold. So 19,672 on the Nifty. The day's low is exactly the level that we put out in the morning, which is 19,605.
It was a ho-hum sort of trading session where the Nifty opened mildly in the green. That wasn't sustained. It fell, and at lower levels it found support to recover once again, only to see that recovery being sold into as well. So with all this movement in a tight, narrow band, what happened today? Well, the Nifty as well as the Sensex ended absolutely flat. But that's not bad, given the fact that we've fallen for 4 straight sessions. This is Markets Today. You're watching on CNBC TV 18, where we track 6 hours of the day's trading action in 5 headlines. And here are all those headlines. Stock markets closed flat after a narrow range session as losses in IT stocks offset gains in financial services, and broader markets outperformed the frontline indices. However, an equal number of stocks were advancing and declining. Sugar, realty and cement stocks gained in trade today. Delta Corp shares tank after the government sends a GST demand notice worth nearly 17,000 crore rupees for a period of 5 years to the company. They contend that the demand is based on cross net value and not the cross gaming value. It says it will pursue legal remedies. Redigare's largest shareholders, the Berman family, hikes their stake in the company by 5%. Additionally, announces an open offer worth 2,100 crore rupees to acquire a controlling stake. It says the move is in line with the vision to create a leading financial services platform. Bajaj Finance gains after the company says its board will consider an equity fundraise in its meeting on October 5th, and let's expect the company to raise about $1 billion. The National Stock Exchange proposes extending trading hours for equity derivatives with a special session between 6 and 9 p.m. Says this can be eventually extended to 11:55 p.m. SEBI to take a final call. Let's tell you what we have lined up for you on the show today. It's a packed show. So, in market opinion, Manishi Ray Chaudhary of Asian Equity Strategist at Equity Cash, Asia Pacific. In big corporate voices, we have Arun Maheshwari, who's the Joint Managing Director of and CEO of JSW Infrastructure, and Vibha Padalkar, who's the MD and CEO of HDFC Life. Let's talk about the markets action then. It was a range-bound session between the 20 and the 50-day moving average on the Nifty. Both the indices, the Nifty and the Sensex, end absolutely flat. It was the losses in IT stocks which offset the gains in the financial services counters. There was a bit of a recovery in the financial services space, led largely by HDFC Bank and other private financiers. Mid-cap index as well as the Nifty Bank outperformed the blue chips, but broader markets, we had almost 1,500 stocks advancing for the same number of stocks which declined. Prashant Nair joins in with the key market highlights.
Well, an absolutely flat session for the Nifty, almost unchanged as compared to last Friday's close. Bank Nifty, very similar to the kind of session we had last Friday. Actually, for both the Nifty and the Bank Nifty, we ended pretty much at the middle of the day's trading range. I'll get to levels in just a bit, but mid-caps had a better day. The index was up over 0.5%. The small-cap index, though, was largely flattish, and market breadth was mostly evenly matched between advances and declines. Now, losses on the Nifty coming through in names like Hindalco, SBI Life and Hero MotoCorp. There was no real discernible trend or a bunch moving up or down together. Gains coming through in names like Bajaj Finance, Tata Consumer and Apollo Hospitals. In the broader market, since advances had a slight advantage, I'll start with them. MCX, Indiabulls Real Estate, Balrampur Chini, actually sugar names, Dwarikesh, Balrampur, Bajaj Hindustan, they all did very well. Tata Investment Corporation, Strides, Sundaram Finance has been sort of picking up pace over the last 2 or 3 days now. No real news flow there. Ramco, the cement company, Vandala, Zaggle, which is a new listing, did very well. And there were Soba Developers. Actually, real estate stocks did pick up in the last 30-40 minutes of trade. Losses coming through in news-related names like Delta Corp, big smackdown there. Berger Paints was down sharply, reversing Friday's gain. Religare was higher, news flow. Venus Pipes, Kalyan Jewelers, EMS, Dream Folks, PNB Housing were some of the other names which saw some selling pressure. I think the signal we'll get from US markets, because this does look like a bit of a global turbulence. And if the dollar and oil prices and US yields behave, I mean, that'll be a constructive environment as we come back tomorrow and look at where we are headed in the near term. Back to you.
All right, Prashant, thanks a lot for that. In fact, in market opinion, Manishi Raychaudhuri of BNP Paribas does believe that the outperformance in Indian markets will continue despite it being in a bit of a correction phase right now. He also expects the government to continue investing in infra, railways and defence over the next 2 to 3 years, the stocks of which have done well over the last couple of months.
Whenever you have the US dollar appreciating, the US bond yields spiking, there's a flow of money in favor of the safe haven destinations like the US markets. So I would think that the entire emerging market complex, the Asian markets, would possibly continue to have some correction. That said, the outperformance by India, even in that corrective phase, would likely continue. I do tend to agree with that if one looks at the global bond index inclusion. From the debt markets, we have the feedback that it would lead to anywhere between 25 to 30 billion inflow on the lower end of the estimate range, and possibly somewhere around 45 to 50 billion on the higher end of the estimate range. If you look at government capex in infrastructure, in railways, in defense, all put together, capex as a proportion of total government spend has skyrocketed over the last 3 years. This government capex would likely continue for over the next 2 to 3 years at least.
Well, let's talk about the second headline for today, and this was the stock that was the stock of the day on the way down. Delta Corp ended over 20% lower, touching a fresh 52-week low, actually a fresh 33-month low after it received tax notices of nearly 17,000 crore rupees from the Director General of GST. The company, to the exchanges, informed that they've got 3 notices from the GST. The first one, of course, was directed towards Delta Corp itself, was a little over 11,140 odd crores. The other 3 coming in for their 3 subsidiaries worth nearly 5,683 crore rupees. This is for GST tax not paid between the period of July 2017 to March 2022. This is a substantial amount. For perspective, remember, this is nearly 3 times the company's current market cap itself. On its part, the company says that this demand is based on the gross bet value and not gross gaming value. So as a result of which, maybe the calculation isn't correct. That's why they go on to say that this tax demand is arbitrary and contrary to the law. What is it that they are going to do going forward? Well, they will pursue all legal remedies available to challenge these tax demands. Be that as it may, remember, going into this news, the stock had already corrected 33% from its 52-week high. With today's cut, it was down almost 50% from its fresh 52-week high. And additionally, it was also in the F&O band, so that created a further impact cost. With this big decline today, perhaps a lot of large institutional investors would have exited some of their stake in the company as well, which explains nearly 6.3% of the company's equity traded in multiple blocks in today's trading session. What will be interesting is that after a 50% decline in a sector which is facing a fair amount of regulatory overhang, are there any important buyers? That is a list that the street will be watching out for. But for now, the stock was down by 20%. That's not all. We got in some expert opinion from legal experts on Delta Corp. Let's hear their voice out.
Quite clearly, they would be on good legal ground, and for 3 or 4 reasons. Legally, the industry will have really solid ground, to my mind, in terms of dealing with it. First, on taxability, which is the game of skill versus chance, and second, on the valuation itself. There are, of course, a series of other arguments, but I think these 2 will be the fundamental arguments. The law is pretty well settled that if you have a retrospective amendment, it must be specific, and absent a specific retrospectivity, all tax provisions are only prospective. And there are a series of Supreme Court judgments on that.
All right, with that, let's move on to the third headline of the day. The Berman family, Religear's largest shareholders, they've hiked their stake in the company by 5%. In fact, that's not all. They've also announced an open offer worth nearly 2,100 crore rupees to acquire a controlling stake. The stock fell 5% in today's trading session as the open offer price was at a steep discount to its previous closing price. Vivek Iyer joins in now to take us through the contours of that deal. Vivek.
Well, a very important development coming in as far as Religear Enterprises is concerned. The Berman family, that already holds a controlling stake in both Dabur as well as Eveready, had set its sights on this particular company and has gone ahead and announced an open offer to acquire an additional 26% stake in the company. Now, this particular open offer was triggered given the fact that the company, which already held close to 14% stake at the end of the June quarter, had acquired another 7% stake during the course of Q2. Now, the company in the exchange announcement indicated that in today's trading session, they intend to acquire over 5.5% stake, which would take the total holding of the Berman family via the various group entities through which it holds stake in Religare to over 25%, thereby triggering the mandatory open offer limit. So on the back of that, the Berman family has gone ahead and given an open offer. What they're saying is that they intend to acquire close to 26% stake in the company. Now, the price at which the open offer will occur is at 235 rupees a share, which is slightly disappointing given the fact that it's such a steep discount to Friday's closing. Now, despite that, the stock has seen quite a stellar rally, and it's also interesting because given the fact that there is now a new promoter who will be coming on board. In fact, Dr. Anand Berman, the chairman emeritus of Dabur India, says that this is something that they were looking to do for quite some time, and they're saying that Religare Enterprises is the right platform and position for sustained success going forward. They believe that this particular platform that encompasses lending, broking and health insurance services will allow them to go ahead and become a leading financial services player. Stock was quite volatile in the session, but despite that, saw quite a bit of profit booking as the stock had already seen quite a stellar rally.
All right, stellar rally and a discount to its previous closing price led the stock lower, but no problems with the Bermans actually looking to increase their stake in the company and making an open offer. Vivek, thank you for that. But let's talk about JSE Infrastructure Limited. Opened the IPO today. This is the first IPO from the JSW Group. This is JSW Infra that we're talking about. After 13 years, after JSW Energy listed in 2010. Arun Maheshwari, who's the joint MD and CEO of the company, said that the cargo volumes of the group companies is at around 63%, and they have an ambition to double the capacity in the next 5 to 10 years.
As on June 23, the quarter ending June 23, it's about 63% comes from the group company. It has been continuously reducing because, way back, the genesis of the company started way back to cater to the group captive cargo. Being a process-driven industry, if you see JSW Steel or JSW Energy, way back when we started in 2004, it was largely for the group captive supply chain management control. The way the group is growing, the kind of ambitions what JSW Steel or Cement or Power has, I think it will be very difficult to reduce significantly the group volume, even though we will continue to grow on the third-party volume. I think on a longer-term basis, it will remain 50-50 or 60-40 towards the group side. So I think that would be a robust number. The way India is growing, I think putting any number to it would be a bit of a challenge as of now. But then I think our ambition is to remain close to double the numbers in coming years, maybe 5-7 years or 10 years kind of stuff.
All right, let's talk about a CNBC TV 18 exclusive where HDFC Life expects to have about 16 to 17% market share in the protection business. Speaking to Yash Jain, Vibha Padalkar, who's the MD and CEO of the company, said that their protection book continues to grow. And they said that they have no aspiration to overtake any company's market share, instead grow their own market organically. Here's a slice of that conversation.
Quarter 1 protection was in the 50-60% range in terms of sum assured, as well as if you were to look at AP growth about 40-50%. It's continuing in that kind of a range even on a year-to-date basis. And our market share also, we are amongst the top couple of companies in the retail protection space. Of course, on credit life, we are growing between 30 to 40%. That continues to happen on the group protection space. Our market share is in the 16 to 17% kind of a range in just protection part of it. Again, short answer is no. We are HDFC Bank, and by that I mean that we have to triangulate in terms of growth, profitability and quality of business. And hence, while we certainly want to stay amongst the top 3, and we are today and have consistently been there. But again, it's triangulating in terms of your bottom line, because if we were to drop our ranking, our new business margins could easily cross 30%. It's not a difficult ask.
All right, so that's about HDFC Life, an exclusive conversation with CNBC TV 18. Take a short break, come back. We'll tell you all about the other headlines that we've been tracking for you. Welcome back. You're watching us here on Markets Today. It was a flat day in a range, a narrow range that was. The banks outperformed. The mid-caps did better as well. We spoke about a bunch of stocks that were in focus, Delta Corp being the most notable of them on the way down. But let's get to all the other headlines that we're tracking for you today. The fourth headline was Bajaj Finance. It gained about 4% after the company announced its plan to raise funds in the next board meeting. The analysts expect that this fundraise could be almost $1 billion via a preferential issue route. The final decision, of course, will be taken up on October 5. Abhishek Kothari joins in with the details. Abhishek, what exactly are you picking up and what does this mean for the overall books of the bank?
Well, lenders are looking to fundraise. So Bajaj Finance will hold a board meet on 5th of October to consider a fundraise. Now, analysts estimate that the fundraise could be around $1 billion or about 8,000 crore. Analysts also say that this would lead to equity dilution of 2%. So they estimate that FY24 EPS could increase by 6%, while book value could rise by 11%. The ROE may fall slightly towards the 22% level, and BAF has been amongst the top pick of many brokers.
All right, Abhishek, thanks a lot for that. And the fifth one, there may be a possibility of higher or longer extended trading session for the futures and options stock. In fact, that's what the National Stock Exchange has planned. They've planned to extend the trading hours for its futures and options segment from the current amount to 6 p.m. to 9 p.m. itself. The exchange has already submitted a proposal to market regulator SEBI. Sources tell us that the NSE is evaluating extending market hours for the F&O segment to 11:55 p.m. thereafter as well in a phased manner.
On equity derivatives, there was a large consensus which has come about, stating that we should certainly do a session in the evening as a small start. And this is the right thing to do. For us, it's important to do the right thing. And although we have an enabling provision to go all the way up to 11:55 p.m., we felt that after all these discussions, we should put together a proposal and submit it to the regulators for their approval. We think that the 6 p.m. to 9 p.m. timeline will give the Indian investors a chance to hedge their portfolio risk should such a situation arise. And, obviously we can look at extending the timings, etc. as we go along.
All right, it will be interesting to see whether that happens or not. It's been a long-drawn proposal. And were this to happen, will the brokers agree with that or not? Because that would mean increased costs for them, which may perhaps not be offset by the increased revenue that they generate from these extended trading hours. But talking about the exchanges itself, and here's a CNBC TV 18 exclusive, multi-commodity exchange MCX may completely cut its reliance on erstwhile promoter 63 Moon Technologies in running its trading platform soon. Remember, this had been a contention for them for a very long time, and now finally it will go live on its new technology platform, which has been serviced by TCS from the 1st of October. Sudarshan joins in with the details. Sudarshan.
MCX stock has today hit 52-week high and gained up to 10%. As per exclusive information, sources indicate that MCX is set to go live on new technology platform being serviced by TCS on October 1. Last week, in its disclosure, MCX had indicated about going live on new platform by the month end. And for the same, MCX has been conducting mock sessions for almost a month now. And sources say these mock sessions have been almost glitch-free. Now, to go live on the new platform, MCX will need approval of SEBI and its board. Apart from this, MCX also has an agreement with 63 Moons to use its platform till December end. Now, in case MCX faces any technical glitch in the new platform, it can use the platform with 63 Moons as a backup. Now, on the query of CNBC TV 18 regarding going live on the new platform, MCX is yet to respond.
All right, Sudarshan, thanks a lot for that. So that was an interesting story, an important one at that, the stock moving to a fresh 52-week high. And finally, Strides Pharma was a stock which was in focus through most of today's trading session ahead of its board meeting. But now we have the details of the board meeting where the company has approved the demerger of their CDMO and soft gelatin businesses into Stelis Biopharma. Strides Pharma closed the day gaining almost 7.5%. Ekta Batra joins in with more. Ekta.
Well, yes, Strides is in focus because the board has approved a scheme of arrangement with Strides Pharma Science, Terry Science Specialities, as well as Stelis Biopharma. Now, the proposal is to basically combine the contract drug manufacturing business of Strides as well as Terry Science into Stelis. Now, Stelis already is a CDMO company which provides services across all phases of preclinical and clinical development and commercial supply of biologics. With the CDMO integration of Strides as well as Terry Science, the objective of this restructuring is to basically build a one-of-a-kind specialty CDMO company as per Strides and the press release, and the capabilities in the CDMO space will then extend from biologics, soft gels, injectables, and complex drug delivery systems. So the scheme of arrangement is as followed. There will be the demerger of the identified CDMO and soft gelatin business of Strides into Stelis, and the demerger of the identified CDMO business of Terry Science into Stelis. For Strides, it's around 13% of the standalone turnover of the company, which is around 235 odd crores. For Terry Science, it is around 99% of the standalone turnover of the company, which is around 316 odd crores. The appointed date for the proposed demerger is the 1st of April 2024. There will be a ratio where there will be 1 share of Stelis for every 2 shares held in Strides, and around 1,515 shares of Stelis for every 1 share in Terry Science. The promoter stake in Stelis will rise to 39% from 29% post the scheme, and the resultant entity is proposed to be listed on the exchanges. There is an analyst call this evening at 5 p.m. There will be more details there. This particular piece of news came out towards the close of trade, and the stock ended around 7% higher.
All right, Ekta, thanks a lot for that. With that, we are out of time on this edition of Markets Today. Thank you for watching. Stay tuned to CNBC TV 18 for more news and updates. Thank you.